Welcome to CRE Fast 5. I'm Carly Iacono, and tonight I'm covering the state of the net lease market. I have some great data for you tonight, courtesy of our CBRE research team, including everything from cap rates to top markets to the most active buyers. But before we dive into this content-rich episode, I want to let you know that I've set up an easy way for you to schedule one-on-one advisory calls to discuss the state of the market, potential acquisitions or dispositions, sale leasebacks, or any other topic covered in CRE Fast 5 and how it relates to your individual situation. Simply click on the link in the comments below to get on the schedule for a one-on-one introductory call or Zoom meeting. Now let's jump into today's episode. Here we go. The good news is that single-tenant net lease has fared very well over the last year, and transaction volume is almost fully recovered to pre-pandemic levels. Single-tenant net lease volume decreased by only 2.6% year over year in Q1 of 2021 to $14.3 billion. To put that in perspective, total commercial real estate volume was down 18.3% last quarter year over year, according to the most recently updated data from Real Capital Analytics. So part of the reason for the resiliency of the net lease sector is that net lease investments provide attractive risk-adjusted returns with long-term leases from creditworthy tenants. The returns are particularly appealing in times of uncertainty. And during the COVID-19 pandemic, the net lease share of all investment activity jumped to 14.7%. Now, during the Great Recession in 2009, it reached 15.1%. So historically, market volatility creates a flight to safety, which is exactly what we've seen. Now let's move on to the top buyer profiles. The largest net lease buyer group by deal volume has now become institutions and equity funds. Their activity this past quarter increased by 40% year over year to $6.7 billion. In contrast, REIT net lease investment volume was down 44% year over year in Q1 to $1.4 billion. Private investment in net lease properties is on the rise. It grew by 6.7% year over year to $6.3 billion. Now note that Real Capital Analytics, which is one of the most reliable data sources, does not track deals below $2.5 million. So the private client investment numbers could be a bit higher, as many of the quick serve restaurants and discount stores often fall below that pricing threshold, and these two categories have been extremely in demand and active. Net lease has also benefited from an increase in foreign investment activity to the tune of an 8.7% rise to $1.7 billion. Now, in terms of which markets investors have been focused on, there is some variation depending on the part of the net lease sector we are discussing. Number one for net lease retail was New York City, whereas the top market for net lease industrial was Los Angeles. But to simplify, I'll run through the top 5 markets for total net lease investment activity. Coming in at number 5 was Dallas-Fort Worth with $475 million of single-tenant net lease transaction volume in Q1 of 2021. This was actually a decrease of 27% from the year prior for Dallas, which just goes to show you how white hot the market really is, that it can slow down 27% and still be in the top 5 metros for activity. Number 4 on the list is East Bay, California, which is a region in the San Francisco area with volume of $640 million, which was an increase of just over 15% from the year prior. Number 3 is San Jose at $693 million. Number 2 is Los Angeles with $720 million. Both San Jose and LA were down more than 30% from the year prior, but still came in at the top of the list. And our number 1 market for Q1 of 2021 was, drumroll please, Boston, with $2.3 billion of net lease investment activity in Q1 of 2021 alone, a jump of more than 56% year over year. Now, as with all statistics, it's important to understand the story behind the numbers. There were 6 very significant single-tenant net lease office transactions in Boston, which accounted for the majority of the volume here. So although it is a great market, the fact that it had such a big jump from the year prior may have had more to do with these high-profile deals than overall investor sentiment or true market growth. The last thing I'll cover tonight are cap rates. The average net lease cap rate remained at 6.2% in Q1 of 2021. The 10-year Treasury yields note closed Q1 at 1.74%, resulting in a tightening of the spread between the average net lease cap rate and interest rates to 449 basis points. To me, it's almost more important to consider the spread between interest rates and cap rates than it is the actual cap rate. A wide spread can lead to a very nice leverage return and higher loan to value. Obviously, a tight spread would have the opposite effect by reducing loan proceeds. A spread of 449 basis points over the 10-year Treasury is still very favorable to investors. Breaking it down further, net lease office cap rates rose by 10 basis points to 6.5%, which was not a big surprise given the varied investment sentiment on office in general. The average net lease industrial and retail cap rates were unchanged from Q4 2020 at 6% and 6.2% respectively. But as with all data points, it's important not to make too many generalizations. For example, although average net lease retail cap rates stayed consistent more or less year over year, there were significant changes within the subcategories. For example, quick serve restaurants and convenience had significant cap rate compression due to demand, whereas others such as daycare and net lease gyms saw cap rates rise. I know this was a data-heavy episode with a lot to interpret. If you have any questions or you would like to discuss the market in more detail, use the link in the text below this video to schedule an investment strategy call. That was CRE Fast 5. I'm Carly Iacono. I'll see you next week.